All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market is in just high rise mode right here. We have seen some pretty strong volatility. Since the lows here of this morning that came in about a half hour after the market opened, the S&P has rallied 140 points, which in today's market doesn't seem like a heck of a whole lot. 140 point drops and pops have become commonplace, but on the heels of yesterday, one of the biggest 2 day rallies in the history of the market. And it's not been super calm, but it's been relatively straight up when you look at it from a daily chart perspective, and takes the market right back to where it was after the secondary dump before we kind of pushed into these lows. But up here around 255, breaking above the 7 day moving average, nowhere close to the 20 day moving average or the 200-day moving average or anything like that, but a very strong pop here. And, we've talked about the nature of the market when conditions are bearish. That's when you see some of the biggest rallies, and when you see some of the biggest drops. And from my perspective, as I look at things, I'm not convinced that we don't see more downside pressure come into the market. And I'm not betting on it yet. I keep looking at some SPY put spreads, but it still feels a little too early. But in all, it's one where we've seen a nice snapback, and stocks like Royal Caribbean, have had really nice bounce backs. The Boeings of the world have had really nice bounce backs. At least erasing some of the selling. If you're in Boeing at 240, it doesn't feel too great looking at it and seeing it at 160, but sure feels better than looking at it under 100. And these snapbacks have been on some massive volume. Some just absolute massive volume here. And, the volume element will likely persist out there. So bottom line, what does this do to the challenge, right? And, the challenge has been in cash for a while during this historic, time period. We've talked many times about that and how the challenge is looking for something very specific. And when we get historic action going on, it's just not going to give us triggers. We have not seen triggers come in here for a little bit. Are we starting to get some of them? We started to see some upside crossovers yesterday. They weren't challenge triggers because of their nature. But what about today? Anything different? Well, let's go take a look. There are quite a few bullish crossovers when it comes to upside crossovers. And let me pull up the list here, and I'll start to show them to you. There are 27 on the challenge watch list today. 27. That's just a massive number, and I'm out of the hyperboles for we've never seen this before, in this market, because in so many ways there's a lot of magnitude elements that the market just typically doesn't experience. But upside crossover, American Airlines. You take a look at this chart. This is going to be a very similar chart to most of the other charts that are on this list. Coming off of a brand new low, I know I'm not going to get a challenge trigger, but it's the first stage that needs to happen to give either a bearish trigger for the next leg down, or to give some sort of small minor pullback that gives another upside crossover for the chance to play this higher. And if we go and look at all 27 stocks on the list, they're all going to look similar. Apple, Boeing, they all look almost the same. Caterpillar looks a little bit different, but same principles. CSX, the same. Chevron, there's no differentiation here, right? Whether it be sector, whether it be stock, there's no differentiation going on. Disney, different sector. Ford, different sector. Facebook, different sector. FCX, but they're all the same chart. And, there has not been a whole lot of differentiation out there. There has been in a few names, and we'll get to them. But Home Depot, IBM, Juniper, MGM. They're all the same chart. Nike, Microsoft, Twitter, Visa, Vale. These are all the stocks on the challenge watch list with upside 3-7 crossovers on them right now. Even the emerging market ETF, the EEM, the the EWZ, the Brazilian market has the upside crossover, and the SPY has the upside crossover. So we have this happening on the indexes. We have it happening with most stocks out there. And it is just a mass movement. It's not anything that's differentiating any sort of price movement. Now, some stocks that we saw earlier create some upside crossovers in similar fashions, like Netflix. They've been pulling back the last couple days. Walmart, same thing, pulling back the last couple days. Now, these are some interesting pullbacks because they do set up the possibility of the next upside crossover being a nice bullish signal. And what's happening to the option values with these? Well, most of these, we're starting to see them come down a little bit. With Netflix, we're starting to see it come down a little bit. Which is nice to see, if you're like me and want into the options on it. But on mass here in the market, we are not seeing the implied volatilities fall today. In fact, the VIX is higher today. Once again, market rally, VIX is up. It's just, wow. The VXX, which was down yesterday, up today about 6%. What is significant about this? Well, this uses VIX futures. And so yesterday you could make the argument that, the VIX is up, but, VXX is down. So it means some of the future contracts for later months of the VIX, they're expecting a fall in that. But those are jumping back up here today. So expectations of continued volatility are still heavily priced into the market. We do not have, at least yet, a bullish signal for the market vibe. And, this is one of the things where if we look at the market vibe and how it is, nailed upticks and downticks in terms of the bigger trends of the market, it's been absolutely fantastic since its inception in 2015. But it's something that just simply is not based on magnitude. And, this is probably the biggest rally we have ever seen without a switch in the market vibe in terms of magnitude. But it just comes down to the market metrics and a lot of the performance metrics over 30 days, the volume flows that just haven't shifted. But we are seeing slight improvement in the areas we talked about yesterday, the 7-day moving averages. In fact, almost every stock is back above its 7. 87% of the S&P 500 back above its 7-day moving average, which is a massive number. That's not a bull market number. We typically don't see it that high in bull markets, but the number of stocks above their 20 is still very, very low and improving. But you can see a lot of these names where they're still below or above their 20. Amazon, right? This has been one that's held up pretty well, but not exactly outperforming the last 2 days. We see a lot of this. With some of these stocks that have held up pretty well relative to major moving averages, they're not seeing the big buying over the last 2 days. The stocks that are seeing the big buying are the ones that have just been absolutely boat raced, that have been absolute train wrecks or plane wrecks if you're talking about Boeing. They're the ones seeing the big volumes. They're the ones seeing the big buying come in. As hope over the congressional bill and some of the life cycle of the coronavirus that maybe things do ultimately get back to normal here. So that's where things are in terms of the metrics and the crossovers. We are significantly closer to getting signals on the watch list, than we were last week or the week before that. We're much closer to it as we're starting to see this 3-7 action, start to take place. But where things sit, at least so far, we are not seeing signals come in, which is, for me, kind of, I'm okay with that, just simply for the fact that, let's say it did have a Halliburton signal. I'd have a really tough decision to make coming into the options and going, I wonder which option to trade, because these options are still filthy. They are still, the spreads are no good. The amount of movement that I need to make money on the option is ridiculous. In fact, for Halliburton, if I were to go buy the 7.5 call, I would need this stock to go up to 8.5 in 23 days to break even. Need it to 9.5 to double my money. Can it go to 8.5? Can it go to 9.5? Given what the recent movement has been, absolutely it can. I'm not putting it past it. It is definitely a possibility. There is enough movement to get that, but you look at just historical factors and you say, okay, am I going to bet on a move to 9.5? Man, that's a little tough to do. And the options, you're paying the spread. If it goes against you, you're going to get hit pretty hard. Ask all the put buyers last week what's going on to their put options, right? This is something where there was a lot of put buying last week. When you look at the numbers that came into the market, directional downside put buying was massive. And you think, how's that going after 2 days, right? And with where the options are going. So you not only need to be right, you need to be right in a big way. And if you're wrong, it's going to burn in a very, very big way. And so, okay, not the most conducive option environment. We don't need the most conducive option environment. It doesn't have to be perfect, but it does need to fit within challenge parameters. And so far, the options for almost everything out there still not within challenge parameters. So I'm more than okay not seeing the signals, with the stocks coming off these lows, but sure would be nice, to see a little bit of consolidation, a secondary 3-7 crossover come in, next week or something like that, and give us a chance to play a rebound on these things, back up to the 200-day moving average. I do know there is the risk that the market does go straight up. And, that is a risk factor there, and something that, definitely could happen. But not something that I have a great risk reward, to go after and to play here. Okay. Now, there's a very limited chance that things could change by the close. One of the reasons I jumped on early is because the chances of it, changing by the close are very, very small. But there is a chance. If it does, I will hop on video. We'll make the trade, and the alerts will be sent out there for it. I was asked, what am I doing here over the last couple of days with this rally? My response was not a heck of a whole lot. I've been buying on the way down certain things, the Boeings, the Bank of Americas, Royal Caribbean, which I jumped into around 30 and, promptly got smacked. And, okay, now it looks a little better. But, I used some of the drop to pick things up, so I'm not super eager to jump in, on the chase to the upside here with shares. I do not have a lot of option positions. I have been looking at SPY put spreads today, but I have not pulled the trigger. It just feels a little bit early here with them. And, from an overall investment standpoint, I still have the exposure that I want. If I add more exposure, I need to add hedging. And the reality is hedging is super expensive right now. And so it's not something that I'm too eager to jump in. I have been watching Valero here today. Been looking at how can I get involved in Valero. This is one when we talked about the energy pullback. I mentioned I want to be involved with refiners when they turn around. I don't want to be involved in Halliburton. I don't want to be involved in Transocean and some of those. I want to be involved in with refiners. We talked yesterday about Chevron with them not cutting their dividend, which was absolutely huge. Yeah, they're not going to buy back their stock, but they're not cutting their dividend, so it's an absolute massive dividend. It has come down in the last couple days, but for me, Valero is the refiner I'd like to be involved in, but I just haven't found an area to pull the trigger. Maybe that is because I'm not used to chasing 20% up days on a specific stock, and that's probably a lot of it, but it is something where we're seeing it trade above the highs from prior days for the first time in a while. And so, okay, we get a little pullback or something like that. I'll find a way to get involved here in it. Ideally, for a lot of these things, we'll just kind of see them get sold to around the lows, maybe break into just a slightly lower low, and then start to snap on back. That would be a very tradable position from an option standpoint and from a risk reward standpoint. But we'll see how they play on out. Everything plays out a little bit differently each time we see one of these scenarios. But thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.